All right, well, let's jump into our 2025 outlook. The bottom line is that for 2025, I'm optimistic on how the year is going to go. And the reason for that is there's a number of very, very important quantitative indicators or pattern recognition indicators, that have signaled that 2025 should be a pretty good year. Now, of course, I want to say that pattern recognition is not a guarantee and that you're only talking about probabilities, but still the probabilities are very strong. So the first and most important trigger that we saw was the first 5 days indicator. Now that indicator says that if the market is up for the first 5 trading days of the year, the chances of a positive year in the market, or in this case the S&P 500, are very high, north of 80%, and typically that return would be somewhere in the mid to high teens. The second piece of pattern recognition or quantitative data that came in that's very positive is the fact that we had a greater than 20% return in 2024. Based on research done by Carson Research, if the market is up more than 20% in the preceding year, there's a greater than 80% chance that the market will return more than 10% the following year. And if you have two 20% years in a row, like we do now, 2023 and 2024, then there's a 100% chance that the market will be up by an average of more than 20%. Now, I do want to warn that that last statistic is based on a limited sample size, so we don't want to get too excited. However, it does bolster the case. And finally, as I sit here filming just before month end, I see that the S&P 500 is likely going to finish the market the month positive. Now, the January barometer, as it's known, is also a very strong indicator for the rest of the year. There's an old Wall Street saying that says, so goes January, so goes the rest of the year. And we do know that if January is positive, there's a typical pattern that leads to, again, high teens to low 20s return. So, based on the quantitative patterns, I'm positive. Now, if we also look at the portfolio, we are mainly oriented towards the US market. And I think the conditions in the US continue to be extremely friendly, irrespective of any concerns we have as Canadians about Mr. Trump and tariffs. The US is experiencing an increase in productivity, interest rates are coming down, inflation is coming down, and we're seeing that the economy remains strong. And this is just a recipe for good returns, or it has been in the past. Now, I'm often asked about what the biggest risk that I see out there is. And in terms of the portfolio, the biggest risk that I see is actually the potential effectiveness of the Department of Government Efficiency, headed by Elon Musk, but supported by many, many very talented Silicon Valley engineers and other professionals. Now, in general, Wall Street forecasters are not very optimistic that DOGE, Department of Government Efficiency, will be able to cut government spending at all, or even anywhere near the stated goal of $2 trillion. However, I think that this is perhaps not looking at the who's involved with close enough eye to detail. Most of the personalities involved in the DOGE office have a track record of accomplishing what simply has to be said is amazing things in very compressed timelines. And if you look, they do have and have laid out very, very carefully the case, both legally and procedurally, to carry out their spending cuts. So I think that's an unanticipated risk, and I think that is a risk for us, because if you see a significant reduction in U.S. government spending, then what is a tailwind to the U.S. economy becomes a headwind. And all else equal, that headwind in this case is big enough to cause a serious growth slowdown or potentially a recession. Now, I of course want to warn that if all else is never equal, and we're going to have to monitor this very closely, but this is the key risk that I'm monitoring. I think that that's really what could affect us later this year or into 2026. However, the die is not cast, all else is not equal, and this is just going to have to be something that we monitor like we monitor other risks that are in the market.